What's going on, everyone? Welcome back to the channel. My name is Jeff, and this is the 3 stocks to short or 3 stocks to buy put options against for September of 2019. First order of business, I want to give a special thanks to Mr. Ron Rhodes. He was the one that suggested to keep 2U on my watch list before their earnings report earlier back in July. And so that's really when I started conducting research on that stock. Thought about buying it when it was in the 30s, but I did see the upcoming earnings report and I've decided to wait off, and I'm very glad I have now. He was the one that made that initial suggestion, and so he is partially responsible for our 3 stocks to buy video that I made yesterday. So now with that said, I want to go over the 3 stocks to short from last month. I have my list right here. As a matter of fact, I just pulled up the video from last month, so I have all of these 3 stocks in one place, and we can kind of review where these stocks have ended up after 1 month of being on the market. Okay, so first up here on top is GameStop. When I published this video, GameStop was trading at $3.84, and now it's currently trading at $3.97. So it's actually up a little over 3%, and of course we were all aiming to short this stock or buy puts against it. But if you do look at the chart, GameStop took a very sharp dip shortly after I published this video and has had some level of turnaround. Of course, Michael Blurry, he has come out publicly and stated that he thinks GameStop is a good turnaround company and that here in the $3 range, GameStop is a strong buy. So that certainly had some influence on pushing that stock back up. The second stock we talked about was Blue Apron, ticker symbol APRN. And as you can see here, when I published this video, Blue Apron was trading at $8.63. And now it's currently trading at $6.78. So an outstanding pick right there, guys. Lost almost $2 of value through the month of August. And I honestly feel as though Blue Apron is going to trade down some more. Do not know if I want to go short here at $6.80. Would kind of like to see a technical bounce or a short squeeze, maybe get it pushed back up to $7 or $7.50 before I bought another set of options. But I did cover on one set, and I'm holding another set that expire in December of this year. So made some pretty good money going short on Blue Apron last month. And then of course, the third position was Range Resource, ticker symbol RRC. And when I published this video, it was trading at $5.15. And now it's currently trading at $3.56. So another outstanding trade here, guys. And this trade netted close to a 30% loss through the month of August. Now, I did try to go short on Range Resource, could not find shares available. And so I bought some puts and did not have to cost average down a bit. As a matter of fact, pretty much from the time I bought them and still holding at about a 75% gain till now, they have pretty much just taken off and made gains. So make sure you're keeping very diversified, lots of put options. That's the thing, guys, about companies that are going in the wrong direction. Does not matter if we're in a bull market or a bear market, bad stocks are going to continue to go down. Do me a favor, guys, make sure to drop a thumbs up on this video if you're enjoying it, and make sure to subscribe to the channel if you have not done so already. Number 1 on top, I have ticker symbol ANF, that is Abercrombie and Fitch. Number 2, I have Guess. So I've used Guess as a stock to short several times before. And so once again, here it is on the list. We will get more into that in just a moment. And then the third stock is ticker symbol VET. That's Vermilion Energy. A lot of people are going to probably debate that one with me. One thing I can point to right off the bat with that company is the unsustainable dividend that they pay at almost 15% right now. Like I said, there is not a company out there that can pay out 15% of their share price in dividends and keep their head comfortably above water. I mean, Apple can't do it, Microsoft can't do it, Google can't do it, Amazon can't do it. And I don't understand why some of these small oil companies seem to think that they can do it. It's unsustainable and it will get cut at some point. But first, let's get into Abercrombie and Fitch. That's ticker symbol ANF. So let's start here, guys. Just a couple of days ago on August 29th, Abercrombie and Fitch reported earnings and they fell 12% after a soft sales outlook. They posted a Q2 loss, and of course they set up for very soft sales guidance going into Q3. Couple of these figures are startling, like gross profit fell 90 BPS to 59.3% of sales. And then looking ahead, this retailer sees full year sales growth to be in the range of flat to up to 2% versus 2 to 4% consensus. Gross profit rate is supposed to be down in the range of 50 to 90 basis points from 1 year ago. So Abercrombie Fitch certainly losing a lot of momentum. I know you could probably go back 10 or 15 years. This was one of the hottest retailers out there. And unfortunately, guys, this is just a company that has failed to reinvent themselves and really bring themselves back into your life one way or another. So I have the max chart pulled up on Abercrombie & Fitch, guys, and I think I got that estimate pretty close to being right. This is a company I've shorted many times before, and around the 2005 to 2007, during that period of time, that's when Abercrombie & Fitch was a supremely powerful retailer, and this was an $80 plus per share stock, paying out roughly a 5% dividend. So that would have been a great one to have in your portfolio. Then this huge dip here came from the 2008 recession, and they did recover into 2009 and 2010. Pretty much since 2011, this stock has been trading down year after year. I do not see this company getting any stronger. So this is the 1 year chart right here, guys. As you can see, the only reason I might want to wait off right here is because I already do own puts. And I try to wait for a couple of these retailers that seem to get really hot at the right time, and then I try to buy puts against them. Do not go short on Abercrombie & Fitch because you have a 5.5% dividend to deal with, okay? And right now they're experiencing a pretty big dip. I can see A&F dropping down to maybe $12 or $13, which would probably be a good place to sell out of your puts because this company is capable of some level of recovery, okay? Institutions will come in and buy the stock up once it gets so cheap, and right now might not be the perfect time to buy puts against A&F, unlike our second company we're going to talk about. All right, now second on this list, guys, I know we're doing two retailers here, is ticker symbol GES, and that's Guess. Now this would actually be a really good time to start looking at some put options on Guess because they've just had their earnings report come in what I feel to be some positive news for them, and it has shot the stock back up to $18. Here, if you would like to look at the 5-day chart, as you can see, they reported earnings right here on the 28th of August, and the stock went from $14 to $15 straight up and was up as high as $19.50. Now it seems to be trading itself back down. So unlike Abercrombie & Fitch, Guess is actually traded itself up right now. This is a $1.29 billion company that pays roughly 2.5% dividend. Again, I would not go short on Guess. I would buy put options. Any company that pays a dividend, I'm going to go the put option route. That way I don't have to pay the broker back those dividend payments. And also, let's talk about this real quick. Okay, if you go here to their short interest, this is only current through the 15th of August. So this number is going to change in the next couple of days, and it'll be updated till after their earnings report. And I'm guessing their short percent of float and their short interest is going to drop a little bit because some of them shorts had to get out. A squeeze happened, and that's what shot the stock price back up. But that short interest will come back to this stock with the stock price going up. Like I said, the outcome of the earnings report was not really impressive enough for people to start going long here at this price. Anybody that bought in that last dip is probably going to sell out here while it's over $16 or $17 a share. But just keep in mind, on average, this stock is shorted 25% of the time. That means for every 3 shares that are bought and hold long, 1 share is being held short. And that is very high for any company, which does give a company explosive potential when it gets too cheap for a short squeeze. But just keep in mind, when the stock price starts going up, it's a good time to start shorting it back down. All right, guys, now lastly, we're going to talk about Vermilion Energy, ticker symbol VET. Now, first thing you will notice, you see all these little yellow dots along the 1 year chart. Now, this is one reason why it might be compelling or it might be kind of attractive to own this stock. It does pay a monthly dividend, but as you can see, rewinding the tape back close to 11 months ago in October of 2018, this was a $33 per share stock that is now trading around $14. So even though this pays roughly a 15% dividend that has not been cut yet, and I have been tracking this stock for quite a while now, as you can see, it's just completely getting taken out of the stock price. If you were buying shares up in those highs at around $33, even though you were getting a monthly dividend, I am sure your 50 to 60% loss on your shares has not been worth the monthly dividend payment. Now, I do see this trend continuing. As we all know, there is a weakness in oil price right now, and that has kind of been an ongoing thing for the end of 2018 and pretty much all of 2019. They had a very mixed earnings report back on the 29th of July, which I took mostly negatives from. And And like I said, guys, real key here, the real reason why I think this stock is going to continue to trade down over the course of time is because the dividend is unsustainable, okay? 15% of their share price is being paid out in dividends, and really, like I said, no company can do that for any long period of time. You know, their quarter 2 production was down slightly, and the US and Australia were offset by lower production in France due to a refinery outage in the Paris Basin. Then fund flows from operations reached 223 million, so that was a decrease of 12%, and that was quarter over quarter due to the refinery outage, timing of crude oil lifting in Australia, and lower natural gas prices. So this stock does carry a very heavy short percent of float as well. Now there's roughly 10.37 million shares held short on Vermilion Energy, and only about 7% of the float is being held short. So that's why I say you're not going to see an explosive move down or up with this stock, okay? Even if they got to an earnings report and let's say the price of crude oil shot up really high, which most of the time benefits oil companies, I don't think it's really going to show up either way on this stock. I'm looking at a nice long-term trade. I'm looking 6 months into the future. So being at September, I'm looking around January, February, March of 2020, and I would be checking out put options that are reasonably priced. And so what I got pulled up here, guys, I got VET put options pulled up with an expiration of March 20th, 2020. This is probably a good time range to be looking to buy puts on this company. And these two here would definitely have my interest, the $15 strikes and the $12.5 strikes, okay? So to get in the money on the $15 strikes, this stock has to lose 12.78% of its value, which I think is very, very doable, even from a technical side. I would actually predict this stock to fall much, much more, probably be trading under $10 a share by the end of 2019. And of course, that makes the $12.50 strikes even that much more attractive. So the stock would have to trade down 20% to get those puts in the money. And if you look here, guys, one contract would cost $118. So definitely something to keep an eye on. Like I said, if you're looking for a long-term play that you can just kind of stick in your portfolio, I would suggest looking at these put options. And again, you dodge all of that dividend expense, that monthly dividend. You don't have to worry about that. When you're trading options, that simply is just not part of the deal, which is a real benefit. But anyways, guys, that's all I got for the video. Make sure to go down in the comment section and share with me some stocks that you're going to be looking to go short on in the month of September, or stocks you're going to be buying puts against. I'm really excited to hear about that. Thank you, as always, for watching the video, and have a great day.